So friends, we are going to talk about the monetary policy of France. Let's have a look at economy of France at first. The economy of France is the sixth largest economy in the world in terms of GDP and ninth largest in terms of PPP. Talking about GDP, the GDP of France is 2.9 trillion US dollars and it is a service dominated economy. The breakup of GDP is such that almost 79% of the GDP is contributed by service sector. Then 1% is contributed by agriculture sector and 20% approximately is contributed by manufacturing sector. The average inflation of France in the year 2014 was 0.5%, while in 2015 it was around about 0.4%. The government of France is targeting to have the inflation rate up to 1% in coming year. The average inflation since the period 1958 to 2016 has been 4.5%. Talking about unemployment rate and employment in France, the overall workforce of France is around 30 million people and the average unemployment rate is 10.3%. The employment rate has been consistent to about 10 to 10.5 in the last 10 years. These graphs on the slide explain the variations in inflation, GDP and unemployment rate over the 5 years period. The next part will be explained by Megha.
As Shadwell has already spoken about the economy of France, I'll touch upon the Central Bank of France and its objectives. The Central Bank of France is responsible for the implementation of its monetary policy. Since 1999, France has followed a common monetary policy of the Eurozone, which is set by the European Central Bank. The primary objective of the ECB's monetary policy is to maintain price stability within the Eurozone. It is committed to keeping inflation low but close to 2%. In order to achieve this goal, the ECB uses a set of monetary policies which include the key deposit rate and benchmark refinancing rate. Since the recent economic crisis, inflation has fallen to a danger level, which is 1% in France, causing the ECB to take unprecedented monetary actions, and it has become the first central bank to ever adopt a negative deposit rate. Formerly, unlike the Federal Reserve, ECB used to typically buy bonds in the euro market, but instead the ECB uses reverse transactions, repurchase agreements and collateralized loans to manipulate the monetary supply. Within the recent sovereign debt crisis, the Eurozone is even buying bonds outright from the feeble Eurozone countries in order to ensure liquidity in the market. And that's overall about France's monetary policy.
Coming to the monetary policy of France, so we have a central bank of France called Banque de France. It certainly works in collaboration with EACB. What is EACB? It is European System of Central Bank. So after 1999, all the European banks, all the European countries, doesn't matter even if they have currency called euro or not, they work in compliance with EACB. To control money into the market, to control the liquidity, they have three monetary instruments. First being called two standing facility. Second, we have open market operation. And third, we have minimum reserve system. So one by one, after we try to understand what these instruments are. Okay, coming to the first instruments, it's very important instrument from the central bank point of view called two standing facilities. So the central bank have two sort of a facility to regulate liquidity into the market. First being called marginal lending facility and second is called deposit facility. The names are pretty much self-explanatory. What is marginal lending facility? If the central bank want liquidity to be into the market, they want more money into the market, so they can obtain an overnight liquidity from national central bank against their eligible assets. On the contrary, on the opposite side, we have a deposit facility also. If there is a more money into the market already, so contrary to that, to stop that liquidity into the market, central bank will try to pull that money into the central bank. So they have a deposit facility to make overnight deposit with the national central bank.
Spoken about the primary policies that are adopted by France in terms of its monetary policy, and he's spoken about the two standing facilities. I'll be speaking about the open market operations. What are these? The primary role of open market operations is three. Firstly, it helps in steering the interest rates. Secondly, in managing the bank liquidity. And thirdly, it helps in signaling the stance of monetary policy in terms of the country. If we talk about the role of open market operations, The structural operations, if we look at that, it in the form of reverse transactions as well as issuance of debt operations or debt certificates by the ESCB, it helps in steering the bank liquidity. I will touch next upon the minimum reserve system. What is the minimum reserve system? It basically refers to the minimum amount that the ESCB requires all the credit institutions in the European zone to primarily deposit with the national bank, primarily to regulate the shortfall in terms of liquidity in the economy. So ESCB primarily requires a minimum reserve system to fulfill the two main functions. First, it helps in stabilizing the money market in the economy as well as stabilizing its interest rates, and it also helps in increasing the demand of the central bank's money by creating or enlarging structural liquidity shortage in the market, and also enabling the development of payment technologies such as electronic money. Without a minimum reserve system, there would be more dependence on the open market operations, and primarily this would result in major fine-tuning activities to be carried out by the economy. The minimum reserve system also helps in structural refinancing needs for the European credit institutions, and this is the primary role that it plays in the economy.
In the next part of our presentation, we'll be covering the exports and imports for the year 2015 for France. When we look at the exports, France has an export to GDP ratio of approximately 30%. The highest dollar value goods which France exports include aircraft and spacecraft, electronic equipment and pharmaceutical products. 2/3 of France's exports go to the European Union, and only 1/3 of its exports go outside the European Union, wherein US is the largest destination outside of EU. Next, we look at the imports of France for the year 2015. In the recent years, France has been a net importer of goods and services. Among services, travel services and transportation are the largest services it imports. It also imports, amongst goods, machinery, vehicles, crude oils and aircraft. 68% of the total imports come from within the European nation.
I shall be discussing two main aspects of the France economy. The first one being the balance of trade and the second one being the sectoral breakup. Let's first look at the balance of trade. French trade grab stood at $3.71 billion when we compare to last month's budget of 3.68 billion euros in the preceding month, and this is better than market expectations because the exports slightly rose much more than the imports, but overall this is an import economy. Now when we come to the sectoral breakup, we'll understand that the services are the main industry which fuel the French economy, and over 70% of the GDP stemmed from this one particular industry, the service industry. Now when it comes to manufacturing, France is one of the world's leading producers of aerospace technology, railway sectors as well as the automotive sector. So we have a huge amount of income flowing in from that sector also. Finally, France is a dedicated labor force as they are known for their working conditions and their economical working levels. And the highest number of science graduates per 1,000 members in Europe. So when you compare France to the rest of Europe, France is the best when it comes to the labor force. So thank you.